right, so let's talk about the federal budget. So exciting. Okay, so when we talk about the federal budget, we need to look at both sides of the coin, pun intended, both the federal revenue and borrowing. And so what that means is federal expenditures is going to be how the government spends its money. And we'll go in depth into two major areas, social services and national defense. And then federal revenues is how the federal government gets financial resources. And the main forms of this is individual income tax and social security tax. So let's look quickly at the three major sources of federal revenues. Personal and corporate income tax, social and surge taxes, and then borrowing. So when we talk about personal and corporate income tax, let's first talk about what income tax exactly is. This is when a share of individual wages and corporate revenues are collected by the government. So anyone who has ever received a paycheck will probably notice that there is a difference between the net and gross income, and that is because the government tells you that you will be paid a certain amount, but then will take some of that, a certain percentage of that amount, and put it in a couple of different areas. And it was the 16th Amendment that allowed the federal government to do this, and this explicitly authorized Congress to levy a tax on income. And the 16th Amendment was ratified in 1913. After the 16th Amendment was passed, then there was the creation of the Internal Revenue Service, which was created to actually go out and collect these taxes. There had been informal income taxes before, most notably during the Civil War. The North collected income taxes to support and help raise its army. But again, it wasn't until 1913 where this amendment would become a federal statute. When we look at social insurance taxes, this is when both employers and employees pay Social Security and Medicare taxes. And so based on numbers from 2010, and I believe that these are still accurate, employees and employers each paid a Social Security tax that's equal to 6.2% of the first 106. Wow, I added an extra zero. $106,800. Sorry, of earning for a calendar year. And then for Medicare, they paid another 1.45% on all earnings. So what this means is if someone is making over $107,000, they do not have Social Security tax taken out. And the reason being is that if someone is making over $107,000, it's assumed that they will be fine later on in life without depending on Social Security. Those of us, including Catholic school teachers who make under $106,800 a year, we have 6.2% taken out so that when it's our turn to grow old and get that money, we have paid our dues, so to speak. And then regardless of what you make, all of us pay a percentage of our earnings into Medicare. So another way that our federal government raises revenue is by borrowing. And this is when the Treasury Department sells bonds, when our federal government does not have actual cash, but instead needs to spend money that it doesn't have. So for example, in my generation, and that makes me feel really old to say my generation because that means I'm different than you guys all listening. I remember that I don't remember when I was born, but I remember my mom telling me when I was born that a lot of my grandparents' friends and my grandparents gave me savings bonds. And so savings bonds are the most common way that the government borrows money. And savings bonds are actually a way that the government borrows money from its citizens. So a savings bond is when someone gives a bank cash and then in exchange they're issued a piece of paper that basically says, this piece of paper will be worth X dollars if you wait 10 years. If you spend it before then, you will only get some of your money back. When you guys take economics class, you will go more in depth in this. But basically, a bond allows the government to get fast cash and then return and pay back that money later. And the incentive is that the borrower of that money will be paid the principal amount plus interest. And this is not just a thing that citizens buy, but also other countries can also buy bonds from the United States. So for example, if you've ever heard someone say the Chinese own our debt. What that basically is referring to is the Chinese government has bought bonds from the U.S., so the Chinese is giving our government cash, and in exchange, we are telling the Chinese government, we will pay you back later with interest. And so obviously when you're borrowing money and there's an interest rate attached, that's only going to increase your debt. So the federal debt is all the money that has been borrowed by our federal government over the years and is still outstanding, meaning what we still owe anyone, any country in history. And today the federal debt is about $17.7 trillion. So obviously equivalent to my salary. Just kidding. So that is how our government gets money. How does our government spend money? Well, one of the reasons why we have such an obscene debt is because as our government expands, it's going to require more resources, like capital, like money, to function. And our national, state, and local governments spend an amount equal to about 1/3 of our GDP, which seems huge, but when compared to other Western nations, it's relatively small, and we actually have one of the smallest public sectors among Western nations. The reason why that is a lot of other Western nations, the governments actually spend more money on social programs like healthcare, like childcare, like maternity leave, and they actually provide those paid services for all the citizens, but those services are obviously going to cost the government money. Our national government spending alone currently represents about 1/4 of the GDP, so just sort of an interesting way to measure that. And the two main reasons why our government has such hefty expenditures is twofold. The first is the rise of national security. So in the 1950s and 60s, we see the Department of Defense really expand and therefore expand its required resources. And so during this time, the Department of Defense received more than 50% of the federal budget. It's not a coincidence that this time was the very beginning of the Cold War, in which we were in an arms race with the Soviet Union. So not only did we need to build guns or machines or armory, but we needed to build even more, and then they needed to be better. And each time we did that, it's going to cost money. Starting in the early 90s, so 91, after the Soviet Union had collapsed, we see that defense spending diminishes, but there definitely have been ebbs and flows since that time as well. Defense currently gets about 1/6 of all federal expenditures, and this is one reason for the growth of our government. So for example, in 2001, we added a new cabinet position, the Department of Homeland Security, and obviously that is going to cost money. That's going to cost, we have to pay people, so staffing, and all the money that goes there is now adding to the budget. The second reason, or second biggest entity in which the federal budget is poured into is the rise of the social service state. I don't know how I feel about this template. It's pretty dark over here. Anyways, the social service sector is the biggest federal spender of our entire federal budget. Social Security is the #1 spender, and that now it includes disability benefits and Medicare, and its recipients are living longer. So just to give you some numbers, and back up a second. So the fear among a lot of people currently is that Social Security is going to run out. Some people have even coined it a Ponzi scheme, but there is this fear that Social Security, which was established in the 1960s, is ultimately going to dry up. So how is that happening? Well, in 1945, for every one person who was receiving Social Security after the age of 65, there were 50 workers paying into that Social Security fund. In 1990, that number had shrunk to about 3 workers for every 1 Social Security beneficiary. And then experts predict that by 2025, less than 2 workers are going to be contributing money to one person's Social Security. Reasons being is that Social Security was passed during what's commonly known as the baby booming era, And so there are now more retirees who are living longer, and there are fewer current workers who are contributing to that fund. And so the fear is that ultimately, by the time younger generations are old enough to receive Social Security, there's not going to be enough money to contribute to every 65 and older's pocket. So it's kind of an interesting concept, because the first generation to receive Social Security, they actually never contributed to it. So before Social Security was established, no one was paying into it. But then all of a sudden when you turn 65, you get a check from the government, those people were collecting younger people's money. So right now I'm paying into possibly our parents' and definitely our grandparents' pockets. By the time I am old enough to receive Social Security, you will be contributing to my pocket. And so have more kids that will pay into our pockets for Social Security. There you go. All right. The Social Security Act, which was passed in 1935, originally was intended to provide a minimal level of sustenance to older Americans. What that means is that when people were 65 and could retire from the daily grind, they weren't meant to buy a beach house in Del Mar, but they also wanted to make sure they could provide for them so that they didn't live on the streets. And like I said, it's just gotten watered down, so that the concern is that Social Security ultimately won't even be able to maintain a minimal level of sustenance. In 1965, Medicare was added to Social Security system, providing hospital and medical coverage to the elderly, and then Medicaid is sort of a subsection of Medicare, which specifically targets a faction of elderly who have disabilities. So all of these programs provide very valuable resources, but all resources cost money, and so the question down the road will be, where is this money going to come from?